And we've got a big voice joining us right now to help us put in perspective a lot of domestic cues, outlook for 2017, and of course where we stand compared to the globe. We have a steelmaker, someone who is the pulse not only on the markets but also on corporate India. Ashok Wadhwa, Group CEO of Ambit Private Limited, is joining us on the show today. Ashok, good evening and thanks a lot for your time. You are joining us at a time when overall the countries have not got a great start for the new year. The economy is kind of shaky, earnings revival is delayed, and if you've seen a deluge of GDP downgrades, what have you made of all of that, and at a time when globe is looking much better in shape than us?
You know, if you think about some of the events that have happened in 2016, most unpredictable, and to some extent, I would argue, companies couldn't have prepared for those events, whether it is the US election, whether it is Brexit, and indeed the transformational step that our government took here in India by demonetization. All these steps have created a serious element of uncertainty. And when uncertainty prevails, general economic activity is either slow or at a standstill. I would argue that 2017 is going to be about dealing with these uncertainties, about trying to build momentum in a relatively standstill situation. And effectively, it will require a very different type of strategy and thought process for companies to weather this type of a storm.
Right. Ashok, the opinion is, of course, divided on whether or not the demonetization impact is going to linger for longer. Some say that the uncertainty may not last beyond a quarter or two. For example, we had Prashant Jain today, express that view. On the other hand, there are others who think that, the pain is here for a little bit longer than, say, the next 2 quarters. Which camp are you in?
I think one thing we have to realize is that our government is taking some transformational steps that in the medium to long term perhaps will change the character of how business is done over here and create a level playing field where competitiveness is determined by your capability and by no other reason or factor. When you take transformational steps, it does create turbulence. And I think what India is weathering at this point of time is a part of that turbulence. The more optimistic look at this turbulence as an opportunity and are re-engineering and preparing themselves for a bigger growth phase as the country moves forward. The less optimistic or the more pessimistic are truly concerned because, as I said earlier, if the competitive edge was not true capability or skill set, but knowledge of the environment and the relations, then clearly they have reasons to feel very concerned about, and they ought to be feeling a little pessimistic. So at this stage, all that I would say is that there is reason to be positive, medium to long term. There is reason to be concerned, which is the short term. Actions taken by the government are having a somewhat negative effect in the short term. Whether that negative effect is on demand, whether that negative effect is on desire to invest any more money, overall there is an element of negative impact and we can't wish it away. Hopefully the negative impact will not be very, very long, and once the more positive elements start operating, I think you will see a more positive and buoyant attitude in the economy.
How's the market pricing in the stock market, all these concerns and issues that you've raised? At least our observation is the markets have remained relatively resilient so far in the face of the risk which we are talking about. Do you see there is downside risk to the market in this light in 2017?
Market is really a reflection of the true economy. Yes, market starts acting and reacting ahead of time, but it's at the end of the day, it's a true reflection of the economy. If there is going to be a dilution in our GDP as a result of the transformation steps taken by the government, it's going to reflect in poorer corporate earnings, which in turn is going to reflect in the markets moving downwards. On the other hand, as the full impact of these transformational actions take place, you will see an increase in corporate earnings in due course, and the market will react positively to those corporate earnings. So all that I would say is that at this point of time, while the market is suffering the early negative impact of the transformational changes, you will see muted corporate earnings, and it is quite possible that you will see one or more dips in the market in the coming months.
Ashok, so in this kind of an environment and scenario, how prolonged can the cycle of earnings revival or recovery be from here on? Remember, we were just about to see broadening or recovery to start December quarter onwards, but that has completely got delayed. So what are we talking about here? How much longer could it take?
Some of the commentators who've spoken about the pain being for one more quarter or two more quarters are certainly more qualified than I am. Having said that, to me, pure mathematics and the dilution in demand at this stage tells me, facts and figures tell me, that this pain is not going to be just 1 or 2 quarters, but perhaps 3 or 4 quarters. But listen, in a 5-year time frame or a 10-year time frame, how do 1 or 2 extra quarters make a difference? We got to look at it as short term, medium term, and long term. And all that we have to acknowledge is, in the short term, whether it's 2 quarters or 4 quarters, there is pain, and that pain is going to translate into a lower GDP. But once, as I said, the pain has fully settled down, you will see positive impact of these important actions taken by the government. And then there is no reason to believe that both the GDP and the corporate earnings will not surface with a new vigor.
Let's shift focus a little bit and also talk about what the M&A space is looking like, and why not, because you've got your skin in the game. 2016 was about deals of players that are heavily indebted in order to repair their balance sheets. Is that a likely trend that's going to continue in 2017, and what can you tell us about what the deal pipeline is looking like for this year?
My own view is that if you ignore a very big phase when startups were getting funded and a lot of deals were happening in that space, you're probably entering a very, very positive environment for the deal business. Yes, the stressed businesses continue to exist, need to be restructured, and are being restructured. Banks are being tougher on promoters, as a result of which you will see both consolidation happening and instances where, as a result of SDR, government, banks are taking over ownership and now finding new owners to come and acquire some of these companies. You will see that activity continuing as banks learn to deal with this stress and try and monetize as much of these companies as they can. On the other hand, there is new and serious interest from global investors. I think the changes that our government has made in India gives global investors huge amount of confidence in terms of India creating a level playing field where they'll have a better and greater opportunity to make investments and flourish.
We'll also use the opportunity to talk to you about, your recently concluded deal in the ARC space with a leading player. What's the opportunity that you're seeing there?
I'm optimistic about that opportunity for sure. And let me tell you why. I mean, we're fortunate to have Chris Flowers, whose domain knowledge in this space is outstanding. And I'm sure he will have a very positive contribution to make to that business from our perspective. But I think as banks take tougher and tougher actions, as RBI realizes that first the 595 and then the 1585 was really not allowing right pricing of these assets, I think all these regulatory changes and the pressure from banks will mean that many more assets will come to the market. And those who really want to compete with strategy of new capital and working out and turning around these assets, I think there's a good future. So I feel optimistic that business has a lot of leg to run on.
All right, Ashok, we leave it at that. Thank you so much for taking time out for us, and we hope to see you on the show soon. Thank you so much.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.